Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. Investors are worried about their tech investments and the upcoming earnings reports, and they're watching the Chinese equity rout with alarm. But first in the US, durable goods orders for June came in much weaker than expected. There was a 0.8% rise recorded from May, but a 2.1% rise was expected, and the May rise was 3.2%. If there is a silver lining, it's that non-defence orders for capital goods rose faster, up 3.1%. That key June data may have disappointed analysts, but consumers are feeling bullish, at least according to the widely watched Conference Board survey. It's now at a 17-month high, so back to pre-pandemic levels. And no one told the survey respondents in the Richmond Fed District either, who reported strong employment gains in July and continuing high levels of new orders. And their June survey results were revised sharply higher. Cost and pricing pressures remain very elevated there. Across the Pacific, Chinese industrial profits are up strongly in June, up 45% above pre-pandemic levels of June 2019, an encouraging result after more concerns about a loss of economic momentum there. In South Korea, they've recorded their fastest economic growth in a decade, with their economy expanding at a 5.9% rate in the June quarter. Private consumption led the way, but spending is expected to slow as their pandemic fight grows harder. And the IMF has updated its global economic forecast for 2021 and 2022, and overall they're unchanged at a 6% expansion this year and a 4.9% expansion next year. But there are offsetting revisions, with the US revised higher and emerging Asia revised lower. In Australia, their Treasurer is hedging his bets all of a sudden. After saying the expected third quarter economic shrinkage will be a one-off, he is now clearly worried about the fourth quarter could shrink too, pushing Australia into a second recession in 2 years. On Wall Street, the S&P 500 has turned very risk-off in the afternoon trade, which is down 0.7% so far. Overnight, European markets were down 0.6% overall. Yesterday, Tokyo, however, rose 0.5% on the day. But Hong Kong shed another huge 4.2% on the day, and Shanghai shed 2.5%, continuing the major sell-offs there. That's an 8.2% fall in just 2 days in Hong Kong and a 4.8% fall in Shanghai. US Treasury 10-year yield starts today at just on 1.24% and a 3 basis point drop. And the price of gold is now back over $1,802, which is back up $3 from this time yesterday. And oil prices have flipped by 50 cents a barrel in the US, and they're now just on $71.50 a barrel, while the international Brent price is just on $73.50 a barrel. And the Kiwi dollar opens today at just on 69.6 US cents and a 40 basis point drop from this time yesterday, against the Australian dollar with 30 basis points lower at 94.5 Australian cents, and against the euro with 50 basis points lower at 58.8 euro cents. That means our trade-weighted index starts today at 72.5 and a big backslide. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.